everyone, and welcome back to the Ask Andrew podcast. Once again, I'm joined by Andrew Sleigh, who's here to answer all of your gold and silver questions. Welcome back, Andrew.
Great, Kellen. Thank you very much for having me back. It's good to be back.
So, why don't we dive right in here with the first question? So, gold hit 3,500 USD, then dipped. Do you think we're seeing any level of market manipulation, or do you feel like that's more so the market correcting itself?
Well, it's a pretty good question. I think there's any dips is going to be manipulation. They're trying like heck to keep gold suppressed as long as possible, even though there's worldwide demand that's off the chart. So nothing goes straight up without natural corrections, but they are trying to suppress, gold and silver anytime they can. It gets a little bit out of hand, or it's among their, let's say, their agenda of when they're ready to buy some more physical, they'll try and suppress it. It would be my guess. So, gold and silver, to summarize, won't go straight up. Nothing does without natural horizontal moves and pullbacks. And that some of it could be natural, but my guess is that there's more manipulation in there to try and buy physical when the pullbacks are engineered. And that's when you play their game, is when there is a pullback, you buy because that's what they're doing. That's what the bullion banks are doing, is they're shorting on paper contracts, and then they're buying long physical to get it cheaper. So that's what we do. You just buy it on the dips.
So do you feel like there is any more style of manipulation towards gold or silver, or do you feel like it's kind of the same across the board for precious metals?
I think there's more effort on silver for manipulation. It certainly is cheaper to do it for silver. Like gold is very expensive to try and move one price, price up or down. Silver is a lot easier to do that with. And I believe it was Ed Steer who's been following the charts on this stuff, and he had presented graphs that showed since 1971 to current time that the number one manipulated metal since that time, without exception, has been silver, and then it's gold, and then platinum and palladium, and all the way out to the other metals. But silver has been like by far the most manipulated and pressured for the last 50 odd years.
And do you think there's been any kind of big events that have caused this? Do you find that they manipulate it a little bit more in certain times when it's doing very well?
I would say the manipulation occurs more often during the good times when the metal is trying to surface and rise. When they beat it down back in 2011, they hammered it from 50 odd dollars US spot down to, from memory, around $11 US spot. And it stayed there for almost, like, it seems like 7 or 6 years. I can't remember. I haven't seen the chart for a little while, but it stayed there as a flat line for quite a few years, with like a variance of like a quarter in value, like 25 cents up or down or whatever. And they did that, whatever amount of money they put in to suppress it, and it stayed and collapsed that market, and it stayed there for quite a while. And then now it's been rising. And so, for example, when we had that hammering down of gold and silver a month ago, when gold went down $300 and silver, which was around 3%, silver went down 9%. The reports I saw was that, the bullion banks went all in to manipulate the silver and the gold down. And all they achieved was 3% on gold, and then within 5 days, it hit an all-time new high. And with silver, it went down 9% and pulled back about 3%. We're probably now, I don't know, a couple of dollars below the recent highs. And that's the best that they were able to do, going all in. So what I'm trying to say there is that the level of manipulation that's going into it is having less and less effect, and far less duration and time of effect. So if they put a couple $1 billion on the short contracts, it used to hammer it down and it would stay there for a year in silver. And now it happens, it's a day or two or a week or something along that line.
Do you think that has, and this is kind of not so much a precious metal question, do you think that has something to do with how how easy it is to get information on everything now. Whereas before, it's you would have to go and read these reports. You would have to go out and find this. Where it's everything's at the tip of your fingers now. You can look at everything up on your phone.
Well, the spread of information is literally like the speed of light now compared to what it used to be, and I'm sure that's having an impact on all of that, where people are instantly aware of things and they're instantly buying dips as opposed to, you know, the market. Like obviously the traders who are on the floor see dips right away, but the average person, you and I, often in our houses somewhere, we're not necessarily seeing the news or the dips for maybe days by the time we actually get around to seeing it, and then so we missed those buys. But now everything is so instant that that's probably having a good impact on how little time that these push downs have an effect for, because all of a sudden China pours in and buys a whole pile of silver, and overnight it regains all of its compression from the day before,
Yeah, and we
and
can directly see that impact as we wake up and check our phones in the morning.
yeah, and then of course it's like, oh great, silver's down, and then you're doing your trades, buying whatever, and so I'm sure that has an impact on it. Never actually really thought of it in that way before, but that was a good question.
So, sticking with silver here, what economic event slash catastrophe do you think could be a leading factor in silver to break its all-time high? And do you think what time frame would you even give that, if you don't mind giving that time frame?
Yeah, it's a really tough it's a really tough one, because every time one thing I've found out over the years with the markets is that anytime anyone makes a prediction, the market always proves them wrong. It doesn't matter who it is. I mean, you can be the best analyst in the world, and anytime you get it right, it's pure luck.
Yep.
Look at Michael Burry in the 2008 when he went all in for short, and that's the first call he got right, and it made him famous. He hasn't gotten a call right since. But not to skirt it, I don't mind trying to answer it, but like we're right now seeing a lot more world events occur just in the last couple of days, where there's all kinds of rhetoric. So for the listeners, as the talk of expansion of conflict keeps on rising, that's the cover for the financial system going down. And so that's a really good sort of warning as to, well, it's getting closer all the time. But I would be really surprised if we make it to the end of the year before we don't have a major item break and a conflict erupt. And then we have, of course, the European Central Bank announcing the digital currency, which is, that's a whole other topic. If it comes up in this, I'll jump into it. But so with those things happening the remainder of this year, it would not surprise me what happens to silver and gold by the end of the year. Like, you just pick a number. So I was saying early in the year that I expected gold to go to 5 grand Canadian by the summer. And man, we were only $200 shy of that at the end of April. so I was pretty close. And then of course,
Yeah, no, you were definitely within the ballpark, that's for sure.
And so now that did a pullback, but we still have, whatever, a couple months. Summer to me is like, July or August. And it's definitely well within the realm of possibility of gold making it there. Now, if gold gets to that number, what does that mean for silver? Well, as more and more hardship occurs, and people, as you've seen, there's been a few more people calling the office, recently in the last number of weeks, that have been kind of like buyers out of thin air almost. And I think that's been spurred on mostly by the Japan bond market failing last week. Then all of a sudden there's been some bigger orders than normal from some people that we may not have heard from for a while. And so more and more things are breaking every week, and more people are starting to get nervous on this, which is forcing people to make decisions and move into the market. So the long story of all this is that this is all inch by inch of momentum and pressure building going into these metals that will have upward pressure to move them up while the bullion banks try and keep it down. And then as soon as we have some kind of major world event occur, then it's, all bets are off. Silver could be hundreds of dollars by the end of the year and more. And that wouldn't surprise me at all. And gold could go to whatever number if we have a major financial collapse, which is brewing in Japan. Oh, that's the thing I should, people should be watching what happens in Japan. That's, I believe, is the canary in the coal mine, because they're having a 30-year bond failure right now. And if Japan collapses with their bond market, that's going to trigger a worldwide event. So everyone should be watching Japan right now, is my guess.
And what do you think the key factors would be that could, potentially break Japan's bond market?
Well, it's all debt.
Okay.
Like, it's all based on the debt. So every problem in every country with their bond market is all debt. There's way too much. The Japanese government has been buying the bond market. So nobody's been, I saw the stat the other day. It's like, don't quote me, it's like 69% of all the Japanese government bonds issued are bought by the government of Japan.
Could you say that one more time, Andrew? I think the connection just dropped there. Could you say that that percentile one more time?
Sure. So I saw a chart the other day. I believe it was 69%. Don't quote me, but it's close. So 69% of all of the Japanese government bonds that are being issued are being bought back by the government of Japan, which is kind of like a snake feeding on its own tail.
Yeah, literally. Okay, so that would make sense as to where you would. Yeah, I can see why you would point that out as an example for the rest of the world to be watching and waiting.
Like we're going to have a major catastrophe over there, and they're a large economy. They have a lot of U.S. debt, $1 trillion in U.S. treasuries they hold. And all of a sudden, if they have to start liquidating that, I mean, this could be massive problems. So people just need to pay attention to that.
Well, yeah, from my understanding, they're one of the top 5 biggest economies in the world. So if we're seeing that type of, that level of failure in Japan's economy, it really does go to show that a country like Canada is completely not off the table.
Oh, yeah, we're there too. We're in the same problem. Nobody acknowledges it, that's all. So,
well, I think we're just not looked at the same way as Japan, right? They kind of have international eyes on them, where we kind of get, we're just a subsidiary of the States in some people's eyes.
Yeah, no, we could fall apart and go down, and I'm not even sure if it would register on the world scale financially, other than, oh my gosh, look what happened to Canada. But from an internal point of view from Canada, like we're in debt beyond our eyeballs. We're in debt to bankruptcy. And so that is, in our own way, internally the same problem that has, Japan in a conundrum. And sooner or later, nobody's going to want our debt either. And when that happens, we're in the same debt spiral loop they keep referring to around the various podcasters and analysts are talking about this debt spiral loop where nobody wants the debt. So now the interest rates go up. So the countries have to pay more to issue treasuries or bonds. And then, so now it's kind of like this spiral that goes faster and faster and gets bigger, meaning like the bill that the U.S. just issued, like $3.8 trillion. I mean, that's madness. Like the last one was 1.2. Why is it 3.8 now? Well, it's 3.8 because the 1.2, if they did something the same, wouldn't have any effect. That's a sign of currencies really starting to fail, and they have to pump the debt instrument, like the dollars, the cash of any currency, is nothing more than an instrument of debt. And this system to stay in functioning, some kind of functioning form, has to have an ever expanding level of debt. So $1.2 trillion bill one year makes things work for 6 months or whatever it is. But now they need 3.8 trillion. And the next time there's a bill that's introduced, it's going to be 5 or 6 trillion. And it'll keep going.
And
So,
yeah, it's just going to keep ballooning and ballooning.
yeah.
So you made a comment about Europe moving towards more so a CBDC, and I wanted to dive more so into that because we did have a viewer reach out and ask a question regarding that. So Europe looks to be a leader in transitioning from the euro to a central bank digital currency, or CBDC, which should be potentially adopted around the world. What do you think may happen leading up to European Central Bank's decision in October, and what are the implications to the USD and gold?
I'll, uh, I'll, I'll bite off the USD in a moment. So central bank digital currency, everything that I've been able to ascertain about that so far, it's going to be a QR code on a smartphone. So that means no more euro, which means they have to collapse the euro and destroy that system, which means the banks go down in Europe, the financial institutions go down in Europe, and everyone loses their deposits and their investments. And and then when everyone's lost all their money, they'll issue this, QR code and have some kind of universal basic income. And if you peel back the pages a few, that's hidden behind the curtain somewhere in the European Union, that they want to institute this, total control digital programmable currency and issue, this universal basic income for everybody because everyone just lost all their money. And also because, AI is going to displace 2.5 billion jobs over the years. And so they have to come up with some kind of social safety net for all this nonsense. But anyway, when this occurs in Europe, in my opinion, by default, you're going to see the same thing occur everywhere else in the West. I'm not going to get into Asia because I'm not entirely sure what will happen there because everyone's busy banking gold like crazy to go on to a gold standard, and I'm not sure what's going to happen there yet. It's a wait and see with BRICS. But on the West, it's very clear cut. We have nothing but debt, and they're working towards complete collapse of the system. And if you have Europe banking system go down and everyone's losing their financials, and even if they weren't planning on bringing that down in Canada, US, or anywhere else, by default, that news would get out. So if you're seeing the banks all close and stories of people losing their thousands or millions or whatever, what are you going to do in Canada? Probably go take your money out of the account because you don't know if you're next. So by default, there will be a bank run in Canada and US anyway. So again, my opinion will be that if this is going to be on time for October, and then obviously you have to backtrack so many months to implement all these takedowns of the financial institutions, that you will have a planned demolition of the entire financial system of the West all at the same time. Otherwise, it's going to happen on its own anyway. So if you're trying to run and manage this show, you're likely going to do all of it at the same time and dream up whatever story you want to say, like international hackers and all that. They'll make up something so that the banks aren't blamed and the government's not blamed. But yeah, so that happens. Gold and silver are going to react. Everyone just lost everything. And when that dust settles, people are going to realize their position in a very short period of time, and the purchasing power of gold and silver will go through the roof. When everyone's broke and you have silver and gold, you can buy their assets for next to nothing because they're trying to raise some money to feed themselves. And if nobody has any money, what does your car sell for? What does the house sell for? Or a sailing boat or whatever. And that is very little because nobody has any money other than those that are holding on metal. Cash will be operating in any country for like a month, maybe two. But then as soon as the CBDC is instituted, they will give that a very short leash, and then they will make it no longer legal tender. So, for example, if this all comes to fruition as what's planned in the European Union, and Christine Lagarde has been reported that she has gone to every country in Europe and stated to their central banks in each country, be ready for October. So that's pretty strong language that they're going to make this happen. So, so when that occurs and over there and at whatever time here, they'll have let's say a week after this stuff occurs, that they'll give you a trade-in for your paper currency, those that might have some, of something like maybe a 1 to 5 or 1 to 10 trade-in or something like that to lure people in. And they'll tell people you have 1 week at that ratio, then week number 2, it'll be 1 to 100 or 500. Week 3, 1 to 1,000. Week 4, no longer legal tender, no trade-in. Something along that line, and that's used that way in history to force people to move into the next system, and then the door shuts behind you and you can't go back out because it's no longer legal tender. And so if you hoard a lot of cash after the first month when CBDCs are introduced, you won't have, the cash will be paper.
Yeah, basically the cash won't be worth the paper it's printed on.
That's it. And proof right there, what we've been saying to how many clients for years and years, there's no intrinsic value to the dollar, no matter what country you're in, because it's only has value as the government says it has value, and it's accepted. As soon as the government says no longer legal tender, it instantly reverts to its true value of 0, which proves the point in itself. So it's madness. But now to the U.S. and gold. This, in my opinion, I think the U.S. will transition to this at the same time. I don't believe they're not going to do that. It's possible they may try and just do it themselves and ignore it. But everything that's being done in the States right now is being done to collapse the dollar. And, they've talked about the cryptocurrency capital of the world, stable coins. No matter what they want to call it, it is programmable currency that they're working the public towards. So I don't see it being anything different. I think what we see is theater. Okay. Is all distraction and theater. Oh, no, the states aren't going to do a CBDC. No, they're going to do a stable coin, but it's exactly the same thing. So
yeah, they'll make it unique to the United States just to, from what I assume, keep their trade power. But with that being said, it's still going to function pretty much exactly as the Europeans will set it up. Am I correct in breaking down your assumption on that?
Yeah, it's just going to be a different adjective, but it's exactly the same thing. And so Beautiful. That's just to appease the people. They know CBDCs is not a popular word in the States, and it's not popular in Europe at all, but they're going to force people into it. So we're going to see that happen. And now when all that starts to occur, eventually gold's going to have to go up from that. It could have a small pullback because all of a sudden everyone's broke. So I don't if everyone's broke, they don't have any money to buy gold. So there could be a correction, but the underlying issue with gold and silver is that it reflects the demise of the currency. So as the currency loses value, gold goes up and silver goes up in that exchange. So with all these spending bills that are going on, like, for example, let's not worry about a CBDC in Europe. Let's worry about the $3.8 trillion package that the administration just put out. That alone is going to force gold up. Like exactly. A lot more.
Well, and yeah, gold's been doing pretty well these last, I'd say, 2 days from when we're recording.
So, that's everything they spend money on is pushing gold and silver up. So it's kind of I hope that's a close enough answer. I don't know what's going to happen short term when this whole catastrophe happens. Gold and silver does whatever it does, but once the dust settles, it'll be tremendous purchasing power because everyone's broke.
It's funny, you actually almost answered my next question, where it's hypothetically, what role would gold play in the quote unquote new world, where every country now has a central bank digital currency? But I think you kind of hit the nail on the head there. If you want to expand on that a little bit more, feel free to.
Um, well, every country having a central bank digital currency is not positive. Like that's something that every citizen should be pushing back against because that's an enslavement system that they're trying to bring in. And if we want complete anonymity, all we have to do is go back to a sound money principle, go back and back the currency with gold and have cash. And inflation goes away. Amazing, miraculous. So why don't they do that? Well, because they want to collapse the currency, steal everyone's wealth, and then issue a programmable currency to have total control, the governments and the banking system. That's their ultimate on all this. So the role that gold will play is going to be the free economy outside of that system. People will want to transact and exchange things of value, so that, like, I want to buy your car or I want to buy your cottage or whatever, and we work out a deal that I'm going to buy it with maybe a little bit of gold and some silver or whatever combo, and we do that exchange between the two of us, and it's outside the system entirely. And so the free market will continue to operate with gold and silver outside of the CBDCs. That's how I see it, and that's how I'm positioning myself. Is that I want to have the least amount possible to do with that kind of system, and it may be very hard to stay out of it entirely. Maybe I have to accept it so I can pay my property tax or something. But outside of that, they're not going to be backing these cryptocurrency, not crypto, the CBDCs with gold the first time around. I don't see that happening at all because Canada can't do it. U.S. question mark. Many of the European countries don't have enough gold. Meanwhile, the BRICS nations have been buying gold hand over fist for years.
Yeah.
So that's not a good sign for us either. So we, as a citizen of any country, you can't help what your government's doing, but you can help what you do.
Exactly.
And that is, you treat yourself as your own central bank. You accumulate your metals. You have some cash on hand, and you stay out of the banking system as much as possible to hedge against that risk.
Well, and as we've said time and time again on this podcast, it's also the value that gold has internationally, right? So it's not backed by whereas even specifically speaking to the USD, the value that the USD has is the fact that it's backed by the US economy, right? Whereas gold is it's viewed internationally as valuable.
Yeah, no question about the gold statement. On the US dollar, what gives the US dollar its strength was that it was the reserve currency of the world and was in demand by every country to use as the settlement for all trade.
Exactly.
And so when you have demand of dollars, no matter where you are in the world, like what country you're in, and you're buying something from somewhere else, you have to exchange your local currency for USD, pay the other country, and then of course, Kissinger did the petrodollar deal back in 73 or 4 or whatever it was, and Saudi Arabia and many other Arab countries had to be paid for oil sales to no matter where it was going in the world in USD. And so when you have a demand for USD or any currency, that pumps the value of it up.
And do you think the petrodollar deal falling through was the biggest impact on USD we've seen thus far? Or do you think that it's just kind of one of the many factors that's been drawing the world economy away from the USD?
It's a really good question. I think if I was, I'm not, any kind of economist, but in my interpretation for what I've witnessed, I'd say that and everything else we've been witnessing the last few years have been all massive spikes in the coffin of the USD.
Okay.
So, you know, when the petrodollar deal was signed against the U.S. dollar, so they're going to do everything else in other currencies, that was certainly at the time a massive spike in the coffin. But we've had so much more stuff happening since then. It's like that spike doesn't look so big anymore. Like it's just another huge spike every month. There's another big spike,
So it
and
was pretty much the first thing that set it off, and then we've been seeing just consistent, I don't want to call them catastrophes, but consistent events that almost match that level of damage to the USD.
yeah, like again, not being an economist and having the qualifications to really give a good measure, but in my humble opinion, like the $3.8 trillion bill that they just introduced is to me like nearly as bad as the petrodollar being thrown away. Because I mean, you're talking about inflation galore that's going to punish the U.S. dollar and the U.S. citizens, and the world is looking at this um, unrelented spending of the U.S. And so that encourages all these countries to continue walking away from the USD. So these huge spending bills are, in another way, just as damaging, in my opinion, because the countries are going, you know what, these guys are all going to go down. They can't spend money like this. They're no longer, they just lost all their AAA ratings. Bad news.
Well, speaking of debt levels, that's actually kind of dipping into one of our next questions here. With the national debt levels as they are right now, do central banks have any other option other than giving another round of money, other than giving another round of money printing? What are your interest rate expectations this year, given central banks need to cut to stimulate the economy versus fight inflation?
Well, the central banks don't have any other tools other than printing money now. So that's going to be, in fact, I've heard, seen a couple of discussions in the last few weeks that quietly QE, quantitative easing, is already underway in the States and in Canada. And it's already, injecting currency into the system to keep it lubed up so that the credit system doesn't lock up. So they're already doing damage control in an unofficial capacity. Um, the history dictates that they'll sacrifice the dollar every single time, no matter what country you're in that's in this situation. So uh, they won't go up with interest rates because um, that will basically collapse everything immediately. So they'll sacrifice the dollar because politically there's no will to do the right thing, and so they'll go to zero. I don't think that's going to last very long. In fact, there was a news clip maybe a week ago that the Swiss banks are now talking about going to zero or -1. Okay, so
How
I don't
would
know where they
negative
are.
one work?
Well, Europe had negative interest rates for almost 10 years after the '08 crisis.
How do you think that would impact well, not only Switzerland's economy, but the Europe's economy as a whole?
Well, they're all going to go that way, and that's just going to obliterate whatever value the dollars have, whatever country you're in, and that's just the historical event that happens every single time, like what we've talked about for eons. And when I found all this out 9.5 years ago, um, and that's how long I've been talking about this stuff. It's all starting to come to fruition now, where the dollars are all losing any value, and it's going to accelerate. And sooner or later, we're going to hit that hockey stick curve, and then all of a sudden, it's going to be abundantly clear within days we're in serious trouble. And right now it's just inch by inch, but all of a sudden, we wake up tomorrow or next month or whatever it is, and then all of a sudden your food or whatever is now up 30-40%, and then a week later it's up another 30-40%, and it gets to be very serious in a very short period of time. And that's how it always happens in history. But yeah, negative interest rates destroyed the pension plans in Europe. So this is going back a little ways before you were in the business, Kellen. But um, basically, in Europe, it was mandated that if you were handling a pension plan, you had to be 70% invested in government issued bonds. Okay, you had no choice. So if you were managing a large pension fund, uh, like whatever, let's call it $1 billion, and you have X amount of staff or employees of the company, and you're trying to grow the fund to be self-sustaining, and you have to have 700 million of the billion invested in whatever bond of whatever country in Europe that's given you negative interest rates. That means
I am struggling even wrapping my head around this, to be
that
quite
means that
frank
you're
with
700.
you.
Yeah, that means 700 million today, and you put that in because you have no choice. I'm just going to do rough math, but let's say a year later, you now have 650 million. Okay, let's say 1% would be 70 million. 70 million, is that the right math? Anyway, whatever, 7 million less. So whatever the math is, you have less than you started with a year later. And so what's been going on in Europe is that the 30% that was left, these pension fund managers were going out on the risk scale, trying to earn more money in equities than they would normally have to. And so these losses are piling up like crazy. Many of them were just wanting to hold cash. They didn't want to hold anything else because at least they didn't lose any money except for the purchasing power of the dollar. But this destroyed the pension plans of Europe, and they were predicting that. I'm going back a few years, but I believe at that time it was the pension plans in Europe will collapse in 10 years. And that's coming up probably around 2030, which is an ironic date that keeps on popping up all the time.
Yeah, it seems like every doomsday deadline, it's always around 2030, I find.
Yeah. So,
So, oh,
so we
go
have,
ahead.
we'll have, sorry, just to wrap up, we'll have a 0% interest rate that will arrive in Canada very soon, whenever. The bad part is that you're seeing long-term bonds, their rates are rising. Okay, so people are like, oh, good, interest rates are going down. Well, that's daily. But if you look at the 10-year and 20-year and 30-year bond rates of any of the countries, well, let's just say Canada, US, and Japan, those rates are going up and up and up. So if you're trying to get into a mortgage in the States and you don't want to have daily, down there they have 30-year mortgages, you're now at 7 or 8% when you used to be 5 or 6%. And it all depends on the credit ratings and all that kind of stuff. So in Canada, we might get 0% interest rates that might fuel variable rate mortgages, but our 5-year or 10-year mortgage that you get fixed could be going up and up because our 10-year rates are going up. And that's what determines mortgage rates in the industry is long-term bonds, not the daily interest rate.
So, in a sense, they're almost just kind of hiding. They're kind of hiding the cost, you could say.
I'm not sure how to apply that, to be honest.
So, what I mean by that is more so when, as opposed to things getting cheaper with inflation being slashed, realistically, the central banks are just moving or not the central banks, but the government as a whole is really moving the cost to purchase
Oh, okay.
into a different
So,
transaction.
so if you mean like they're disguising the fact that, oh, we'll go to 0% interest rate, so now your variable rate debt is easier to service, so we're giving you
Exactly.
relief. Okay, that's all just absolute. Yes, it's giving relief. There's no question about that because all of a sudden if your more variable rate mortgage, is adjusted and your line of credit is adjusted and your um, whatever else might be affected drops, then you've got that temporary relief at the expense of the dollar being destroyed, which is not apparent at the same time. It just comes back to haunt us a little bit later. So you get instant relief on your debt today, but 4 or 5 or 6 months from now or next year, you suffer a 25% increase in the cost of living, of food and whatever, as a hypothetical scenario. So it's short-lived, and it's just, you can't have a strong economy and a strong um, country with a weak currency. It's impossible. You actually have to have a strong currency, which means you have to have a strong interest rate. Okay. And if you go to zero, you're really in, nobody understands it this way, but in my interpretation, that means your currency is worth zero.
And why
Because
do
it
you
will
feel
be.
that way? So can you expand on that a little bit further for our viewers?
Sorry, just repeat the question. I didn't quite hear you.
So why do you feel that way, that if an interest rate is zero, that also reflects that the currency's value is zero? Just expand on that a little bit further for our viewers.
Um, so when you turn around and if I'm issuing debt, I'm a country and I'm issuing debt, which is in the form of a bond or a treasury bill, and I'm paying 0% interest rates. Are you going to buy the bond from me?
Probably not, no.
No, not at all. Like you're going to give me 100 grand and take a bond that pays you nothing. Why would you give me 100 grand?
Exactly. That's okay.
Okay.
So when you break it down like that, that is a completely viable stance then.
So if I'm paying 0%, I've issued debt relief to my citizens temporarily, but nobody on the planet wants to buy the government issued debt because it pays nothing.
Okay.
So therefore, that means there's not too much value to the dollar. And when they try and prop up, I guess here's a way to explain it. I guess people have often heard that, the government, let's say US, is trying to encourage people around the world to buy their debt. That phrase gets thrown out there here and there. So they increase interest rates to entice people to buy their debt, which props up their currency.
Okay.
All right. Now, if you go the reverse and you go to zero, that means it's destroying the value of the dollar. So that's just using their equation against them. So, and not to mention when they go to zero, that means that the government is also doing QE and pumping trillions of dollars into the system. And I don't understand exactly why. It's a little bit above my understanding, but this is just what they do. They go to 0%, and that's what they did from 08. 08, 2008, the great financial collapse. They pumped trillions of dollars into the system to rehydrate all the debt bubbles from collapsing. And we're there now in spades. And now when this thing breaks, it doesn't matter what they pump in. I don't know if it's going to make any difference. The bubble's so darn big that you pump hundreds of trillions of dollars in. Does that even matter now? I don't even know. But it will matter to the dollar because you pump hundreds of trillions of dollars to try and reinflate these bubbles. The dollar will be obliterated and be like Zimbabwe, Venezuela, Argentina, all these countries. And as a result of these dollars collapsing, you want to hang on to your hat what happens to gold and silver. It's going to be astronomical because the dollar is going to descend very, very quickly into like 1/trillionth of a penny. Well, if gold is 3,300 US spot right now, or whatever it is, at in the US dollars right now around 2 cents, give or take, and it goes to 1/trillionth of a penny from there, what does that mean gold is?
Well,
I
gold's
don't even know what,
skyrocketing at that point, not because
like
the value of gold is raised, but more so the hedge against it just plummeted completely.
the
So
cash
the
just,
US dollars
yeah,
that you're hedging against it aren't worth anything. Again, they're not worth the paper they're printed on.
yeah. I mean, how many nothings does it take to buy gold? Like, I'm sure in Venezuela they gave up on doing that long ago because you're talking like trillions of dollars. Well, like I showed before on a previous one, that $100 trillion bill from Zimbabwe.
Yep.
Okay, like that buys you one egg. Well, how many of those do you need to buy an ounce of gold?
Yeah,
Like,
exactly. You'd have to take 100 trillion of the $100 trillion bill, right?
yeah,
So,
it becomes absolutely nonsense. Like it's crazy. So people won't even pay attention to the value in dollar terms at some point. All they're going to do is realize that, hey, I can go buy this property, this farm. I can buy things with the gold. I can buy things with the silver. silver being very important because you're going to be buying like food and negotiating smaller transactions. Gold will be only usable for big stuff. So gold will go through the economy very slowly. Silver will go through, day to day trading hand to hand. So I hope that answers the question. We went right off the
Yeah,
page
no,
on that one, I
we've
think.
had some very good questions this podcast, so they're a little bit longer. We've only actually asked four, and
Wow, four
that's
questions.
all I
That's
have.
wow. Well, that was a long one, but yeah, but very important, I think, because uh, as this unwinds, like keep your eyes on Japan. Right now, the best information we have is Europe switching to this CBDC, and by default, this is going to, my opinion, it's going to have to be unfolded everywhere else anyway. And unless they change it, and here's the thing to think about: if they delay it in Europe, let's say they go from October and wait till January, and people prepare or improve their position or start improving their position right away, and let's say they get to the end of June and they've got some of it done, whatever it is, it's delayed by a few months and goes to January. How worse off are they? Like if you're early to the show, you didn't miss the show. You got the best seat in the house.
Exactly.
You paid less for the silver, you paid less for gold. If this gets delayed by a few months, and so instead of being July, August, or September, we see all these financial calamities starting to happen, maybe it gets pushed off till September, let's say October, November, December. And then January is the date where everything switches over. Well, if you bought in metals, to be in place before the end of June, you paid a less of an amount for them. And as we have things start to unfold over the next few months, what is the likelihood that gold and silver are going to go up? Just because of all these nasty things are happening. And so that likelihood is very strong upward. So the moral of the story is you can pay less now to get prepared or improve your position, or you can pay more later when things do start to break, and you'll get 30 or 40% less for your same amount of money of your physical metal. So you're not going to lose, by being early. I've been 9 years early. How has it hurt me?
Exactly. Now you're just prepared more than you would have been if you started today, right?
That's it. Like today, if we use that exact example, I started 9 years ago. I started buying silver at $18 Canadian for a maple, and now they're whatever $52. So how has it hurt me to be 9 years early? So that
Which, and yeah,
example,
at the end of the day, too, if you were actually looking at this as a regular investment, that's a great return.
yeah,
18 to $48, right? So it definitely doesn't hurt you in any sense to be prepared to also just diversify your portfolio as a whole.
yep, yeah, 100%. And so I'm waiting patiently for the show to start, but it's like it's very nice not to have the exposure to the system. And I encourage people; it's a pretty good feeling to be in that seat. It's going to get ugly, and when it does, if there's anything left that you haven't done, that's massive. Um, those will be very problematic to handle. I also believe I saw a video of David Webb the other day, and he was talking about Japan being the canary in the coal mine for maybe the great taking being triggered. So if Japan goes down, and if what he's predicting comes true, that means the great taking, as described by him and others that have agreed with his work, whenever that occurs, I mean, that could pick a date on the calendar. Let's start a football pool in the office, right? Like nobody knows the exact date, but boy, if you're early, you're good. If you're late or behind, the doors close, the movie starts, you don't get in to see the show.
Yeah, at a certain point, you do miss that cutoff point. You miss, what's it called? The ship has sailed at that point.
That's right. Yeah, yeah, that's right. The old saying goes in the industry, silver becomes unobtainium, and then it becomes unaffordium. And like we've seen that happen during the pandemic when there was no shipping going on. the street dealers didn't have any inventory for 2 months.
Well, and then the premiums at that point too. So it's not even the value of the metals that the client is paying into. It's due to the scarcity of the silver, the premiums just skyrocket. Now, with that being said, if they are looking to liquidate it, we're typically offering better prices on a liquidation because we're also looking to get our hands on that silver too.
Yeah, yeah, like they were through the roof back in like 3 years ago, roughly. Like premiums on maples were $12 over spot, Canadian. Now they're six, give
Exactly.
or take, right? And so like that just tells you the market's softer in Canada, so it's cheaper to buy um, here than other places in the world that might have higher demand. But anyway, that's that's a wrap. I don't think I can comment about that too many more times. But being early is better than being late. I can tell you
Well,
that.
that's
So
it. Well, Andrew, thank you for your time today. As always, if you want to go ahead and let our viewers know how they can reach you directly, feel free to do so.
yeah, thanks, Kellen. So you can call the toll-free number, which will be on our website, sprottmoney.com or .ca. It's 1-888-861-0775. My extension is 230. You can email me by deathofthedollar@sprottmoney.com. So that's death of the dollar, sprottmoney.com. I do get busy in spurts, so do be patient. I will get back to you. And thanks again, Kellen, for reading some great questions today. Those were good ones. I like those.
No worries. I'm more than happy to do so. I look forward to our next podcast, and you have yourself a good one now.
Yeah, thank you. Have a great day, everyone.